table.
Yes,
Correct.
absolutely.
Hey, we just went live. I don't know what happened, but it's going live. It's working.
Oh, I'm live?
Yeah, it's going to be, yeah.
Yeah.
Okay. Good morning, everyone. Welcome to Biz and Tax Matters with Mike and Dennis. I'm your host, Michael Davis. I'm a certified public accountant. My co-host, Dennis Markowitz.
Good morning, and I am an enrolled agent.
And we both operate from Bucks and Montgomery County, Pennsylvania. Today, our special guest is Steve Turner of RMS Strategic Business Solutions.
Hi, I'm Steve Turner. Nice to be here.
Thank you for being with us, Steve. Our mission is to inform our listeners every other week as to the various aspects of running a business, the tax code, and answer any questions you may have. So please call in your questions to our call-in number, 609-460-4673. We're also simulcast live today through PANJ YouTube page at www.panjtv.com. We will monitor your comments and provide feedback. So if you're interested in any of our past shows, they're now available on our website at bizandtaxmatters.com. Just so you know, if you're listening to our live show, today is April 30th, 2019. We also have an email address, bizandtaxmatters@mjdaviscpa.com. Our show is available in podcast at panjradio.com and will be replayed at 11 o'clock every day for the next week. So if you're not listening to our live Tuesday show, send an email to your questions with your questions and we'll answer it on our next show. Our email address again is bizandtaxmatters@mjdaviscpa.com. Please note Biz and Tax Matters in the subject. Again, our live call-in number 609-460-4673. In the past 2 weeks, we did get one question from a listener that wanted to know why his refund was significantly less than it had been in the past. I know, Dennis, you've gotten that call several times this tax season.
Yes, I have.
As did I. There are several reasons for it. I guess the biggest one is the reduction in the withholding tables that
Yes.
IRS warned everybody about all through the year, and nobody really listened.
That's right. In fact, the W-4s that you should be filing really don't do anything to inform you of how much should be withheld. The only way of determining that is actually doing your tax return to see how you fit into the scheme of things. You lose your dependents, and the increase in the standard deduction for some taxpayers is beneficial. To others, it may not be. And
Correct.
It just depends on the facts and circumstances because the tax simplification that they've been trying to do, this is just the opposite of what they've done.
Oh, yeah, tax complication is more like it.
Yes.
I know people, the IRS is still telling people to check your withholding on an ongoing basis to make sure it's being withheld enough, and look at what your tax is going to be for the coming year.
It's funny that you say that, because I had one client that told me he checked his tax withholdings during the course of the year, and that he was shocked when he owed so much money, and he asked me why. Well, I took a look at the withholding on his W-2, and it was only 10%, but he was in a 19% tax bracket. So I said, didn't you realize that? He said, no, I just saw that they withholding income tax.
Well, I have one client that was a small business, made about $55,000 with a family. Husband's retired, and 4 children. And they pay, their income tax was $5,000 more than it was the year before because of the changes in the law.
Yes.
So, does anybody listening know, check your withholding on an ongoing basis. Just because the refund was less doesn't mean your tax went up. In most of the cases that I looked at, even though the refunds were less, the tax was actually down. But because of the withholding,
Yes.
it was the big difference. So we'll go to our updates. And the IRS has said, in response to various misconceptions spreading on social media and tax refund, they're offering an explanation of 5 key points that they want taxpayers to keep in mind. And this is in their IRS Tax Tips Notice 2019-45. First, it's incorrect that taxpayers who receive a tax refund for this year have no need to adjust their withholding in 2019. And they're saying to avoid an unexpected tax outcome next year, taxpayers should make changes now to prepare for next year, especially with the withholding, as we discussed. If you expect your income to go up, make sure your withholding is going up. Taxpayers are strongly encouraged to do what they're calling a paycheck checkup by using the IRS withholding calculator that can be accessed on the agency's website. Second, they're saying it is incorrect to think that by contacting a tax professional or the IRS, the refund will be expedited. The IRS can't expedite it, and neither can we. It goes through a process. And they're saying, in reality, the best way to check the status of the refund is online through Where's My Refund. I actually, last week, had a client call, wanted to know where their refund is. And that's what I told them to go to, because that's the best place to check it. It's a tool on the IRS website that's really actually pretty good. 3, when ordering a tax transcript, it is not a backdoor way of learning the refund date. The actual status of the refund will not be on there. 4, information appearing on Where's My Refund may appear to be wrong simply because updates to the tool were made only once a day, usually overnight. They want taxpayers to keep in mind the time it takes for the bank to post the refund to an account. Just because the IRS issued it, could take a couple days for the bank to actually post it. 5th, a refund is less than expected does not mean that Where's My Refund is wrong. There are several factors that could cause this, making the refund smaller or larger. Among the factors are taxpayers make mistakes in math on their tax returns several times. There may be federal tax debt outstanding, or the agency is withholding a portion of the refund while it reviews an item claimed on the return. That may happen in some cases with earned income tax
Yes.
credit. It may happen in some cases where people are claiming head of household. There are instances where they will do that.
That is correct.
So that's what they want people to know. That's again, that's people want to look at it. It's the IRS Tax Tips 2019-45.
Yes. Now, the IRS has announced that starting on May 13th, only individuals with tax identification numbers can request an employer identification number as the responsible party on the application. The responsible party is generally the person who ultimately owns or controls the entity. Individuals designated as a responsible party must have either a Social Security number or an individual tax identification number. According to the IRS, this change will prevent entities from using their own EIN numbers to obtain additional EIN numbers and will bring greater security to the EIN process. The IRS has decided to make this announcement now to give entities their representatives plenty of time to identify the proper responsible party and comply with the new policy.
Yeah, I think they're getting a lot of fraudulent requests for EINs. Entities trying to hide things,
Yes.
and I think that's how they're going to, they're approaching the security on that. Here, in a divorce decree, properly transferred ownership of S corporation shares. In this particular case, this taxpayer was married to a professional ball player who owned an S corporation. The corporation held various investments, including a 69.5% ownership in a partnership. The couple divorced in 2009, and the taxpayer was granted ownership of the S corporation in the divorce decree. For the years at issue, she did not file the returns for the corporation, nor did she include her share of the entity's income on her personal returns. She argued when the IRS came to her door that the divorce proceedings resulted in an unenforceable agreement to agree. In other words, the court proceeding didn't transfer legal ownership of the corporation to her, merely ordered the parties to divide the property within 30 days. Connecticut District Court looked at this and disagreed, holding that the divorce decree created a legally forcible right to ownership in the S corporation, as most divorce decrees do. Divorce decrees are normally final, and you have to go by what's in the divorce decree. Therefore, the taxpayer was obligated to pay taxes on her share of the corporation's income.
Yeah, well, that's not uncommon in divorces because a court decree only states what the parties are supposed to do. The parties are then supposed to do something about it, and that's like custody of the children. And who claims the children?
This wasn't the court decree. This was the divorce decree, which normally, my understanding is the divorce decree is the final agreement between the
because
parties.
it's in writing.
Right.
Yeah, it's a legal document.
It's a legal document. And she took the position that it wasn't a final document when it was.
Yes.
I wonder if she was going to return any of the cash that she got in that agreement.
Probably not. She thought that she could get the cash and not have to report the income.
So when you enter into any legal agreement, particular divorce decree, you should definitely make sure that you understand what's in that agreement. Have your attorney explain it to you so you know what your requirements are and what you're required to do.
That's correct. Many of you may have filed your tax returns and found out you owe money, and as a result, there was an underestimated tax payment. And the IRS has announced that that penalty waiver for certain individuals who otherwise required to make estimated tax payments by January 15th is being expanded to include individuals total withholding and estimated tax payments exceed 80% of the tax shown on their 2018 tax returns. The usual percentage threshold of 90% was reduced to 85% by a notice in 2019-11 in January. Taxpayers should complete Part 1 of the Form 2210, which is the underpayment of estimated individual taxes, and to determine the waiver if the waiver applies. If it applies, the taxpayer should check the waiver box and include the statement 80% waiver with the return. Taxpayers who qualify for the waiver and have already paid additions to the tax should file a Form 843, which is a claim for refund and request for abatement, and include the statement 80% waiver of estimated tax payments, so that if you've already filed your return, you still have recourse and get some of that money back.
Correct. And this was actually The reduction in the percentage was actually a response that the IRS made because of the change in the withholding tables,
Yes.
which we discussed earlier. And so they did try to provide some relief because of the difference to people that actually owed money. The Child Tax Credit Administration for objectors to Social Security numbers. For the tax years 2018 through 2025, taxpayers claiming a child tax credit must provide their children's Social Security numbers on their tax returns. And this is part of the Tax Act. In a recent program manager technical assistance, the IRS concluded it is not required to administratively accommodate taxpayers who object to obtaining Social Security numbers for religious or conscientious-based reasons. There are compelling governmental interests to ensure uniform and orderly tax administration to prevent improper child tax credit claims. According to the IRS, the least restrictive and only means to further these interests is to require a qualifying child Social Security number. There has been a lot of tax fraud with the child tax credit over the years. I don't know any other way that they can work around that.
Now, if you're filing an earned income tax, because of the dependence that you do have and the money that you do make, the possibility of being examined, not audited, but examined, is much higher than if you're a wealthy millionaire filing a tax return, because they are catching a lot of these people who are getting what is actually referred to as a negative income tax. They're actually getting money back. And they figure, well, it's so small anyway that the government's not going to notice. It's going to go under the radar. But it's so prevalent today that the IRS is looking at this.
Correct. And they've determined that the only way that they can actually control it is to require Social Security numbers. And that is part of the Tax Cut and Jobs Act,
Yes.
which is why it's got the dates of 2018 to 2025. At this point, that goes away in 2025.
And that is correct.
So, if you object to having your child get a Social Security number, then you're not going to get the child tax credit,
Well, now it's almost automatic.
pretty much.
Yeah, at birth that you do get it.
But I think you can stop the hospital from requesting it if you are an objector, conscientious
Why,
objector. So.
why you would be an objector is, beyond me. I see no religious aspect of this at all, or any other reason of not registering. In any event, a co-owner of a staffing company was liable for trust fund recovery penalties. A district court has held that the co-owner of two staffing companies was a responsible person for purpose of Section 6672. He determined financial policy, he hired and fired employees, and had check-writing authority. He acted willfully because he authorized payment of non-IRS creditors while the delinquent taxes were increasing. Now, this is not unusual, but you have to keep in mind, anybody that has a business and has the authority to sign checks can be responsible personally for any unpaid taxes.
Including bookkeeper.
Yeah, absolutely.
Anybody
including-
that has the authority to sign a check.
Correct. And that includes anybody who has authority but does not sign checks. They are liable. And what this did was showing that they were not only liable for the trust fund taxes, and the trust fund taxes are taxes that are withheld from someone else and then remitted to the government, like a sales tax. But they were also liable for the trust fund recovery penalty.
Yeah.
So, and that's a hefty penalty.
And that can be as much as the tax. That can be up to 100% of tax.
100% of the tax.
So, yeah, if you've got signature authority over a bank account where you work and you're just an employee, you may want to reconsider that.
That's right.
Because I have seen them go after bookkeepers in the past.
Yes.
So,
And I've seen a number of accountants who, for whatever reason, have signature authority over the checks, that they had their name removed because they know what they have to do. But by the time they get in and take a look, someone has not paid the taxes who is responsible for it. So it is a problem.
great. And I think this is going to be our last update. Legal fees in employees' drug-related death were not deductible. The CEO and sole shareholder of an S corporation took his girlfriend, who was an employee of the company, on vacation to St. Martin. They were accompanied by other employees of the corporation. During the trip, the girlfriend died from an apparent cocaine overdose. Her mother sued the taxpayer and the company for wrongful death, and the case was settled for $2.3 million. The company deducted the expenses. The tax court held that the S corporation could not deduct the settlement costs and related legal fees because none of the employees were involved in profit-seeking activities during the trip. The Fifth Circuit affirmed it, finding that simply being named in the suit was insufficient to prove the company's expenses were deductible, and providing cocaine to the employee didn't arise from, further, or use property directly employed in the company's business. And this is actually pretty much with any business trip. People, especially foreign trips, you need to keep a log of what you did business-wise during that trip, or it is not deductible. It is entertainment, which is not deductible.
Correct.
Or personal and should be on the W-2. And that's what they're saying, that the court said this is basically a personal trip and that none of the expenses should have been deductible, and the litigation arising from the unfortunate incident, those costs were not deductible, even though the company had to pay them.
How unfortunate.
Yes. Yes. So now we're going to get into our topic of three of the mistakes that business owners make. I actually did do a search on the internet and I found 16 mistakes. There's a load of different mistakes that business owners make. We've just picked 3 for this particular type discussion. Today, our guest is Steve Turner of RMS Business Solutions. Steve, you want to tell us a little bit about yourself and your background?
Yep, we have a coaching business, and we help small business owners particularly enhance their marketing activities so that they can enjoy greater cash flow, greater customers, greater leads, and greater cash, since cash flow is so important to the life of a small business.
No, small business is all about cash flow. That's why
Yes,
people are
that's
in
right.
business.
That's right, exactly.
When I do my QuickBooks training class, that's what it's all about, is
Yes, it is.
maintaining cash.
Absolutely.
It's all about
Without a
maintaining
doubt.
cash. It's like we say in the class that because of accrual basis, profit can be imaginary, but cash is a fact. And it's there.
Cash is for real. It's there or it isn't.
Correct.
Yeah.
Correct. Which actually leads right into the effects of the 3 mistakes. First one being is that cash flow is killed, and that's again critical, especially to small businesses, because not a lot of times they don't have the resources to be able to borrow funds, or if they do, it's at extremely high rates.
Yes, it
Well,
is.
there's also another aspect of that, and the fact that businessmen think, well, I have a loan, a working capital loan that I can use to fill in the cash basis. What they don't consider is, how do I repay this working capital loan, which is the reverse of cash flow. It's taking money out of cash.
Correct. And to do it properly, and I do have a client that's a contractor that does this. He uses his credit line to get started at the beginning of every season, and his goal is to get it paid off by December, so that it's gone by the end of the year. And that's the type of thing you should do when you're in business, is when you, especially with a credit line like that, is you should have in your plan when you're taking the money how you're going to pay it back.
Well, it's interesting because if you do sit down with your banker and he's willing to lend you the money, one of the questions he will ask you is, how do you intend to pay it back? And you have to remember, there's a cost to this that you're deducting.
Yes, there is.
Yeah, yeah.
And,
Just because the interest is deductible, that only gives you a percentage of it back.
yes.
Yeah.
Now, there's also the reality that as you're attempting to pay back this cash loan, that it is actually a reduction in your operating cash while you're doing the payback.
Yeah, but
And you have to consider.
And the principal payback is not deductible because
Right,
you
exactly.
don't. And as I tell
Exactly.
people which don't get it,
Yeah,
is that you don't pay tax on the money when you take it out.
exactly.
but you pay tax when you repay it.
Correct.
Yes,
Correct.
exactly.
And the other thing is, in a small business, 20% of what we do makes 80% of our profit. Most of us have one or two things we do well and fill in the week with the marginal activities that will usually eat up our profits. I mean, one of the things we're going to get into a little later is keeping track of the 20% of the activities that you make a profit on. And we'll also talk about looking at what you do well. Business owners do one or two things well, and they should concentrate on that on an ongoing basis.
And that includes the business owner trying to do his own advertising, his own accounting, his own tax work.
Correct.
You have
His-
the owner should have a
his own-
specialty,
His own computer stuff.
right?
I know people that try to do their own contracts.
Yes,
And yes, a lot of those things that owners should not do.
correct.
I have a quote here that that someone quoted that a business consultant once said, "We should come to work on Monday morning, just work on valuable efforts, then go home for the week Tuesday at noon. All the rest of the week, all we do is mess up our companies."
Well, I'll tell you, that can easily happen, particularly if you're not focusing on what your priorities are. We have a tendency to drift towards what we like to do. Yet that may not be part of the 20% that contributes to the 80% of your bottom line. So there's a constant balancing going on between what you're doing, what you need to do, and if there is a gap as a result of those, determining how you're going to cover the gap. So yes, we all have our own area of expertise, and we have to recognize what it is early, surrender it early to somebody that's got the ability to do it in much less time and with much less higher quality than what we could have in a.
Right, we should concentrate on
Yeah,
our area of
absolutely.
expertise.
That's
and-
right.
And sign everything off. And that's actually, the first of the three mistakes is doing things. And I have an example of this actually, is I have a client that has a cleaning company that did very well, had several employees. She lost her biggest contract. Happens. So instead of working on the marketing, she suddenly decided that she was going to do the payroll. She's now doing the bookkeeping. She's now doing everything, all the administrative stuff. Now she has no time to market. And as she's doing it, she keeps losing client after client after client because she's not servicing her client.
Yeah, that you don't service the client, and you also don't have the time that you need to take to be able to think through what needs to accomplish. Doing small things that somebody else can do is very drawing on your own management time, not only from what your brain has time to do, but what you physically have time to do. And you need to be in a position where you can let your mind do the job it's supposed to do, as opposed to stocking shelves and getting involved too heavily in the day-to-day work of the business. Otherwise, you won't do your leadership job.
Correct, correct. And as the leader, if a task occurs on a regular basis and has a direct impact on your customer, that's what you should be working on. That's the stuff you should key on. If a task occurs on a regular basis and has no impact with your customer's experience with your company, you should be looking at outsourcing it out.
Yeah, exactly.
Things, payroll. If you do sales tax in multiple states, that should be farmed out. Direct to mail advertising and SEO on your website, don't do that yourself. Let an expert do that. You spend your time growing your business. In some cases, bookkeeping. And too many people try to create their own websites that are not usable.
Don't do it.
And we actually discussed that on the last show,
Yes.
talking about how you use your website to grow your business. And if you don't know all the tricks involved in the Google Analytics and all that kind of stuff, you should not be working on your own website.
Absolutely.
And it takes an expert to do that.
Right.
That's Murphy's Rule personified. You're promoted up to the level of incompetency.
Correct.
Exactly.
And on the last show, we had the owners of iConnection Internet Services out of Doylestown and One SEO out of Philadelphia, and they both made that very clear that there's a lot of analytics that are changing all the time that they stay up on top of that you as a business owner can't.
Well, even in one of the businesses I get involved in is it's changing constantly. Analytics, search engine optimization, Facebook, the whole thing is constantly changing. And for a business owner to try to even get involved to the degree where they understand it to the point they can actually execute, they're going to run out of the skill in about 3 weeks. That's how
Correct.
fast
That
it's
long?
changing. That long.
Yeah,
So you need to have somebody in line that is keeping this up for you so that you can spend your time just reviewing as opposed to doing, because
That's like
all you'll do.
That's like a jack of all trades and a master of none.
Exactly.
correct. And that's why those companies are out there, and that's why those companies exist. And they make money for that reason.
Exactly.
And most larger companies outsource that stuff, or they have departments that do it.
Yeah.
Well, I don't agree with you on that, Mike, because I've seen too many of these multinational companies that have been unsuccessful, like a Sears or General Electric.
Well, they weren't unsuccessful because they weren't doing their internet stuff and keeping up with the SEO. They were unsuccessful because they didn't see the changes in the business going to online and didn't keep up with it.
But that's the point that we're making here. You know, they were not. They should have it outsourced to
Handed it
people
off.
who know
Correct.
of what to do.
Absolutely.
Yeah.
So trying to
that's
keep
correct.
everything in-house no longer applies. That's the
Correct.
changing
But
field.
my opinion, I think the changes in the marketplace is actually up to the people operating the company to see that, because they should be aware of that. If they're operating a company and selling widgets, they should be aware of what's happening with the widget market on an ongoing basis.
Absolutely.
And that's what they should be doing. So I don't blame Sears for not outsourcing that. I blame the people at Sears that were running the company that didn't pay attention to the changes.
Yeah. There's another advantage to outsourcing, and that is that you can add it or take it away as you need it. When you bring things in-house, you don't give up as fast as you take. So it's one of the nice things about specialization. You can, if you need 3 people, bring them in. If you don't need them next week, they can go off and help somebody else. So it's much more better use of time and cash.
It's like I have a client that's in IT, and he just signed a contract with a larger company because they needed somebody to come in and help
Yep.
in a certain instance, and he's got a contract for a year to help them in this
And that's it.
particular operation.
That's all they
At
need.
the end of the year, he's done.
Done.
Okay, but in the meantime, he's out there working for this larger company, assisting them. And they obviously don't think it's going to go longer. And if it does, they may
They can do it again.
renew the contract, correct?
Exactly.
So they could,
It also gives the company an opportunity to evaluate it. If they want to renew the contract
Right.
or go with someone else based upon the success. So it's forcing them to take action.
it's also easier than hiring several people to do a job and then having to determine who you're going to fire.
Exactly. Yep.
So, yeah. So I guess we can go into the second mistake that people make, and that's failing to determine which products, locations, or services don't make money. And that's a big problem too, and that a lot of these companies don't measure what their products are, what their products are doing. I had a guy in a networking group, and I tell this story all the time because it drives me crazy. A contractor, and he comes up to me one day. We've known each other about 3 years, and he says, "I'm busier than I ever have. I'm working more hours, and I don't have any money. Why?" My first question was, have you checked your job costing?
Yeah.
I make money on every job. But have you checked your job costing to see what it costs you? I make money on every job. When your job is done, did you check to see that what you projected the expenses to be was what you made on the job? I make money on every job.
Yeah.
This went on for about 3 minutes,
Okay.
okay? And it took me that long to realize I can't help him. Because
Right.
he doesn't want to do what he needs to do to measure.
There's the element of constantly updating the management priorities and statistics that you use to analyze your business. What the cost is, the revenue, the one versus the other. As jobs change in their mix, you may have done a project once in a while, then all of a sudden now you're doing it all the time. That's going to generate a different mix of your resources, because some you've probably brought in-house. Now all of a sudden that job isn't around anymore. Now you have to release those resources. So you need to know exactly what's going on in every project. Some businesses are heavily project oriented. They start and stop. Other businesses are product oriented in that a set of products may be around for a while, but even those change over time. And you need to know the dynamics that drive the cost in each of those situations, or you'll never change on time.
Correct,
You'll
and
be
you have to-
wondering the question that the gentleman just asked you, why am I working 24 hours a day and my piggy bank is empty?
Correct.
Yeah.
Correct.
Absolutely.
I don't know how he's making money on every job. If he's making money on every job, maybe he's making $100 a job. To him, that's making money, and that's not enough.
I bet it could also be partially costed. You got the variable costs in there, but the fixed costs aren't covered. It's easy to miss unless you
yeah,
actually sit
correct.
down and lay it out A to Z and do an entire cost analysis based on the total bucket, not just what you
Correct.
think is impacted.
Correct.
Absolutely.
And one thing as far as failing to determine the products and locations, higher profits don't necessarily come from more sales. They may come from more profitable sales.
Yeah, smart sales.
Understanding what you're doing right and try to do more of it is one of the things that companies should be trying to do. The gentleman that actually wrote the original QuickBooks seminar that I do tells a story of how he had a small business, and he was running the business, and his sales were great. His sales were where they wanted to be. They were growing all the time. Next thing he knows, he finds out he's bankrupt. Went to his accountant. He said, "Why didn't you tell me?" The accountant said, "I give you P&Ls every month. You ever look at them?" "No, I just put them in my desk drawer." Okay. That's how we found out the value of looking at these reports and
Absolutely.
started getting into consulting accountants on
Yes.
teaching people to
Yep.
do that. It is critical. They actually tell the story that when they were going into bankruptcy court, his wife took her ring off and hid it under a rock before going into the courtroom because she thought they were going to take it from her. So, yes, a lot of people get in that situation because they only think about sales.
Right.
And running a business is it's not about sales. It's about profit.
It's about everything.
It's about cash flow.
Yeah.
It's about what you put in your pocket
Absolutely.
and how much money you make.
Yep. And where you make it.
Correct.
Yeah.
And the other thing is the last thing is in of the three mistakes. The final one is eliminating customers you shouldn't be doing business with.
That's a difficult choice.
That's a hard one. That's
Yeah.
hard
Very hard.
That is really difficult.
because we like the list.
And we like the list, we like the billing. I had a client that about 4 years ago got involved in getting divorced. His total focus changed on how to stop his ex-wife from getting anything. He stopped running the business, he stopped marketing the business, and business slowly went down. I felt bad for him and kept working with him even though I wasn't getting paid. Okay? You know, in the business, Dennis, you know, you become friendly with the clients.
Yes.
And, you know, I'm sure you've been in this situation before. Back last fall, I had to testify in the divorce proceedings. Testified the divorce proceedings, sent him a $200 bill to his personal account, not the business account, because divorce is personal. He got mad that I billed his personal account and not his business account.
Okay.
Okay. And beginning of this tax season, changed accountants because of it. Okay. He owed me $18,000.
Mm-hmm.
And I offered him to pay it. Said, you want to settle it? Give me 12. Thought that was reasonable.
Mm-hmm.
Oh, I don't have any of that. I have no money. You know that. So you weren't planning to pay me then all along.
Right.
Okay, so I felt bad for the guy,
Yeah.
and I had people that I paid to do the work. You know, I had a lot of costs involved, and apparently it wasn't appreciated. So just because you try to be nice to somebody
Yeah.
doesn't mean that they're going to, in the end, they're going to think of themselves.
In the end. Absolutely.
So you've got to learn as a business person where to cut these things off.
Exactly. You know, we love having a list of customers. Like I have all these clients, you know, I got 20,000, I'm just picking a number, 20,000 customers, but 15,000 of them don't do anything. And there may be, not necessarily, but may be a cost associated with actually having those 15,000 on your records that you don't need. Someplace, and I think it's healthy that on a repetitive basis, you go through and you maybe trim the bottom 10. I'm just picking a number, 10%, whatever is good for the business, so that you remove the ones on the bottom that aren't doing anything for you, and you can then concentrate on bringing those on the top that do something for you. It's a dynamic event, and it keeps going.
Correct.
Well, there's also another concept which is non-monetary. Fact that if you eliminate, as you say, 10% of your customers, that's less time you have to spend in the business, more time you spend with the family, and you're rejuvenated then so that you can go back and do a better job on the other 90%.
Right.
And that has no value that you could put on it.
Right, absolutely.
I think I saw an analysis. If you get rid of your bottom 20% and take the other 80% and just increase their sales 5%, you make more money.
Yes.
Mm-hmm. Oh, yeah. Yep.
So it's something to consider. It's very hard to throw customers out the door for whatever reason. Some customers are just a pain in the neck. They're calling all the time. I need this. I need that. They don't always want to pay for it.
They don't tell you up front that they can't afford to pay for
Right,
it,
no.
but, you've been my accountant for many years. You should do this for me now.
Right. Yeah. Correct. But in any business, you get customers with that theory. And you've got to learn to cut them. You're spending a lot of time on those customers, or start billing them for that time.
You know, it's not unusual for a client or a customer to not realize that you're in business to make money. They think you're in business to help them.
That's-
Correct.
Yes.
That's correct. They do. And that's not while you're in business. You're in business just like they are for the cash flow.
Right.
And as a business owner, you need to keep that in mind and at times make difficult decisions.
There are times when you actually have to bring it up. Maybe not quite as directly as we're talking here, but that in the answer that you give to a question, underlying is the implication that I am providing you a service and you need to reciprocate. And, you know, once in a while you have to do it. Otherwise, people take advantage of situations.
Yes.
There's no question about it, and you can't allow to let it drift very long. You just gotta, like, you know, cut it. Or you talk about 80% of your time getting no result, that's where it is.
Yes.
It's
Correct.
servicing areas that.
It's servicing the 20%
exactly.
that provide no profit.
Exactly.
Correct.
Yeah.
That's exactly right. It's the Pareto principle
Yep.
over and over again.
Mm-hmm.
Dennis, you talk about this formula all the time to your clients. Income minus expenses equal profits.
Oh, sure.
Simple, right?
Very simple.
Do cutting expenses always increase profit?
No.
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 In the short term, yes, but in the long term, it can hurt you.
Only in the immediate short term can it help you. People think that advertising is a non-revenue producing expenditure,
Correct.
just like professional fees. And if you're selling retail, you must advertise. Not advertising is defeating the whole purpose of being in your business. You want to increase sales. Well, how do you increase sales? You have to spend money.
Correct.
And, you know, if you don't have that money to spend, then you have to look at, you know, not wasting your time or effort and to cut your losses.
I know in the last downturn, I was meeting with a lot of clients on cutting their budgets, cutting their expenses, where to cut. And the one thing I told them all is your advertising and marketing expenses, don't cut. If anything, you're going to need to increase that because your marketplace is now smaller and you have to expand your marketplace to get the same business.
But you have to
And-
be smart in that.
Well,
And you
yeah,
should
that was the
hire
next thing.
professionals.
Professionals.
Because if you're directing your sales to the market that you need, you don't need something that expands outside your marketplace, but it has to be direct.
And when you are doing your advertising and your marketing, you need to set something up to be able to measure what you're getting from that.
Yes.
Well, the fact is that you may be still marketing in a method that's slowly eroding and not giving you any return.
Yes.
So the strategies that go forward have to be strategies as opposed to tactics that simply sends pieces of paper out in the mail.
Right.
There needs to be a strategy that gets the right message out about the product or service that you have, the benefit it is to the customer, and educate them along the way so that they have a chance that they decide to choose you, so that you are actually marketing a product or service with a dominating marketing position.
And this is continuously changing.
Yes,
Correct.
absolutely.
It's funny. A client of mine brought up something that subliminally I never realized. Do you ever see the commercials for drugs on TV constantly, the new drugs and everything else? Did you ever notice the commercials after that? These attorneys that want to sue all these drug companies or accidents, you know?
It's good placement.
Yeah.
Yeah, for sure.
You know, you don't realize that, and that's the importance.
And they
of
probably
doing
pay for
business.
that.
Oh,
yeah.
absolutely.
I would
Prime
bet, yeah.
spot.
Yeah, and these are things that a businessman has to be aware of what to do, strategically placing their energies into areas that's going to benefit them,
Yeah.
Correct. And using professionals to do the estimate.
using professionals.
Correct.
You know, it's not like the old days with the mom and pop stores on a corner. You know, everybody knew you. You came in. You didn't have to advertise. Maybe you would have some discounts on products and everything else. to
Everything was
incent-
word of mouth.
Correct.
And it was the
Now-
only option.
Right. Now it's all about Facebook and you know, anything on the computer that does it.
There are too many options,
Yes.
really. Many, not too many from the perspective of it's good to have information available to make wise choices, but there are so many choices that the mom and pop operation down the street in a small town doesn't exist anymore as far as the leverage of being the only place anybody goes.
Right.
Because now you can go to the internet regardless of where you are, and you can find something. So,
Correct.
you know, who's ever marketing has to really find the spot in their product or service where they can create uniqueness in what they do so that they're actually in a position to be able to say, I can do it better, to get away from this.
Even though it's the same amount of money or
Yeah,
more.
exactly.
Well,
Exactly.
you know,
There's the right place to put it.
And also, with the advent of computerization and you know getting news out, you have to be extremely careful on how you position yourself. Like Mike and I had a discussion with Kate Smith. When this came out, you know, people reacted without thinking, and they made decisions without foreseeing the outcome because they thought they were doing right. You take the New York Yankees, you know, they won't have her singing the song in the seventh inning. Why? Because of actions she took in 1930.
Right.
Well, what about the actions of the Yankees in 1950 when they wouldn't let the African Americans play on their team? You know, what action are you taking on that?
Yeah.
And they didn't play up to the view that, well, people change. The world is changing. It's a different place. And you can't blame people for what they did.
Well, they also didn't research it. And they didn't
Obviously not.
research why that was done. And that was actually done to bring light on those situations. And the fact that one of those songs that they were talking about, and they were only talking about 2 songs out of 300. One of them was was actually written by a minority, and she performed it with him. Okay, so yeah, they overreacted, as did the Philadelphia Flyers.
Yes.
So, but you can't overreact to things. Is I think the
and-
point there.
The point I'm bringing up is actions like that can affect your marketing seriously in the wrong direction
Absolutely.
Correct.
without any forethought.
Correct.
So something should be researched. I mean, it's easy enough. I go out with a group of people and they're talking about someone, and the next thing I know, half the people are Googling it to get the information.
Yeah.
Right. Yeah.
Right, wrong, or indifferent.
Yeah, I listen to things all the time on TV and the radio, and I hear something. I don't remember that, and I go and Google it.
Yeah, for sure.
Yeah,
It's,
and-
it's
and-
very easy to do.
And if you go to the movies and you notice that they have a product that someone's drinking, Coke, Pepsi, whatever it is, they pay for that to get it shown on TV. Oh, my favorite actor drinks that. Gee, I'll drink
Yeah.
that too. You know,
He gets paid to drink it.
Yes.
You?
Yes.
no, I have to pay to drink it.
Anyway, back to our
Yes.
formula building revenue makes a great company, but it has to be the right revenue for that company that's going to produce profit.
Well, you know,
Profitable.
when clients come to me and they say, how can we make more money? I said, simple, increase your revenue. Then they come back with a difficult question. Well, how do I do that?
Right.
Yeah,
I don't know. I wish I had the secret. I do it myself, but
right. And the thing is to try to figure out what you're doing wrong and keep it right.
Yes.
That's one of the things. And looking at your revenue sources, and just because a revenue source is not producing a lot of income, doesn't mean you cut it out. Because the thing you have to look is that particular revenue source then creating people to look at your other revenue sources that you're making more money.
Exactly.
Okay, loss leader type of
The
thing.
loss leaders, yep.
Correct.
Yes.
You have to be careful of that, and you can't just say, "Oh, this didn't make enough money. I'm cutting it out." You can't do that.
Well, it certainly helps to understand the interaction between one product and another. You know, it's kind of like
Correct.
You have an item, and then you almost get a natural cross sell with it, in that you have a coat. You're selling clothes, and it's a coat. Well, now they need shoes,
Yeah.
and things work together, and you need to understand the interaction between the two, and the cost structure that supports it.
Right.
So if you have a good understanding of it, you'll know the impact of, if I get rid of the coat, I might lose the shoes as well.
And figuring out what you're doing right and keeping track of it. One of the ways of doing it is that on an ongoing basis, look at your numbers. On an ongoing basis, maybe not daily, but at least once or twice a week, you should be looking at your profit and loss statement, in particularly comparative with the year before, and see where the discrepancies are. I'm a big believer in comparative financials. Whenever I look at any financial for a client, it's always comparative.
Yeah, it tells a story,
It tells a
or
story.
it should ask a question.
Correct. It creates
not.
questions.
Yes,
That's exactly
absolutely.
right. Accounts receivable reports. In particular, look at your over 60, over 90 days,
Aging,
and why aren't they paying you?
Yeah.
What are you looking at? Why are you performing more services for this company that owes you money? I should take my own advice.
Yes.
Yeah.
Well, that's why you can give it, because you've learned from your own personal
Right,
experience.
That's right.
Too many times I've seen clients, and there was one client, we did a cost study and the whole 9 yards of what to do, and they weren't making money. And after taking a further look at it, we noticed a number of things that they were doing. Number one, they weren't updating their cost factor per the item. They were going from memory of what they used to pay years ago. Then the fact was, how many jobs do you have to do to spread out these intangible costs or indirect costs? And they decided, well, they're going to narrow down how many jobs they actually do, but they never increased the cost of the indirect costs to cover it.
Right. Yeah.
So it takes a lot of work, and the owners need help. They need the expertise of people to come in and make suggestions of what to do.
And be taught how to look at the numbers. A lot of small businesses owners say, I can't do numbers, I can only sell. Well, if you're going to operate a small business, you need to look at your numbers.
You need to know the numbers.
And another report that they should be looking at is their accounts payable report. How much money they go out, what's due in the next, and the AR reports, a lot of people, you look at them 30 days out. AP reports, you should be looking 7 days out. What do you owe within the next week? And I sit down and do my bookkeeping Thursday nights. And when I'm doing that, I'm not looking at what did I owe in the last week, what do I owe for the next week, and then the week after that, and try to plan that out. What we understand and what we look at, we can manage. If we're not looking at it and don't know what the issue is and don't know I need $10,000 to pay bills this week, I'm not going to work towards it. But if you know that, it gives you a target and something to work for.
It reminds me of a story of our 10th high school reunion. All of a sudden, this limo drives up, and out comes the kid who had dropped out of school because he couldn't do schoolwork. And they all asked him, what's your success? What do you attribute it to? He said, well, it's easy. I would have a product. I make 3% on the product. They said, well, how do you do that? He says, well, it cost me $100. I charge $300.
Okay.
It worked, okay.
Okay. And in that particular case, his sales by customer or product report would show him a lot of profit. Mm-hmm. Okay. And we talked about this before, sales by product, customer, or job. Especially contractors have to keep track of what they're paying per job, and it's definitely important.
Yeah, and that's why it's so critical that you have a good bookkeeping department who knows how to handle it and knows
And
what
keeps
to do.
everything current.
Yes,
Because if you're trying to make judgments based on what's current, your system has to be current. It
correct.
has to be up to date. And the last report, being that we're talking about the 5 reports, is a cash flow.
And that's probably the most underused
Yeah.
report there is.
People don't understand it.
Correct.
When I mean, I get people, and I had a bunch of them this tax season. Well, how did I make $100,000? I only got $5,000 in the bank, and I go pull up a cash flow report,
Yep.
and I say, here's where your money went.
Yeah.
This is where your money is, or where it went. Hopefully, it's sitting in receivables because you haven't collected in the last 30 days. So,
It's the lifeblood.
correct.
In some of my clients, I changed the name of the report to where the cash came from and where it went.
Yes. Yeah.
Yeah,
And
source
with
of
that,
use.
I want to thank Steve for helping us out today and
Pleasure.
participating. It was great. It was a good discussion.
It was
I enjoyed
enlightening and kind of scary for business owners.
And we won't be back in 2 weeks as we normally are because Dennis and I are going to be in Harrisburg talking to our representatives as members of the Pennsylvania Society of Tax and Accounting Professionals.
Correct, in which we're trying to make sure we protect our clients and the constituents about raising taxes or not raising taxes.
Correct. But we will be back in 4 weeks with another topic, and hopefully you'll all tune in. Thank you, and have a great month.
Thank you. It was a pleasure.